a result of that. The mixed question was, look, do you wait to the end of the candle or do you just knock some out? And I said, look, I like to see it get pretty close. And you have your rule. It might be within 5%. It might be within 2%. I said, look, within 2%, a couple of percent away, 980-ish around there, looking to take some off the table. Here, it didn't even get 5%, so I'm not sure you would have had that opportunity. But we can see possibly some supply coming in this upper shadow here. And this candle's live. We don't know where it's going to close, possibly because of this point of supply, this old point of supply here, and the other one there. So, but I think, looking here, if you get that sort of pop, I don't think you could go too far away from taking some off the table. I think if the shadow grows to the point where we're more than halfway down the balance point, you could take some off the table if you're really nervous. Other than that, my honest opinion is this candle is not so sinister enough yet, and $10 is not coming into the picture just yet to warrant doing anything but hanging on. So that's my final conclusion. I'm trying to give you some of the rationales that I considered to get to my final conclusion. Hopefully it gives you an idea of some of the things you might want to think about to get to your final conclusion. But I'm a holder for now. And you say, oh, Carl, that shadow is concerning. Yeah, look, it is a little bit concerning. It's still a live candle. We haven't seen the end of it. But this gap is more important to me. And if we consider the totality of this candle with the gap, it's still an overwhelmingly positive candle. And that's why I would prefer to hold at this stage. And I know it's tempting for you to take some off the table because you finally, we've got a profit, right? That is tempting. But, that's my view. Withstand the temptation for a little bit longer. I'm a happy holder on that one. Could I add to it today? No, obviously not. It's a long way from the green zone, bit of an upper shadow. So I'm not buying today. I'm certainly not. I've talked about the potential selling and more of a hold. But a really great little case study. And just going off this theme of earnings. So we've had a few today, so far. James Hardie, I think, went our way really nicely, and that still looks very, very good. We said potentially, there you go, within that sort of 49. Well, that's only 1%, isn't it? But you could go, say, around $49 even, and that's that idea of taking some off the table. Hasn't gotten there yet, but looking like it will. Increasingly looking like it will, with some great candles through here. And again, considering it's a great little segue, isn't it, from 360, looking at that shadow there, this candle here, this is what I'm talking about, didn't exactly light the world on fire, did it, that day? And you could easily think, oh, okay, I have to get out now because it's popped up. I think that's a really, really faulty thinking. I mean, the goal is to hold on to your winners. If I instill anything into you, hopefully that's it. Carl's goal is to hold on to and reward winners as much as possible, and to jump the hell out and run as fast and far as possible from losers. So, it's 360, James Hardie, completely different companies. There's no reason why they should trade in the same way, but you can see that gap. The candles are probably very similar, and that candle there wasn't any great reason to get out. This one is a little bit disturbing, that big black candle. I could see a reason for you with the proximity to 50 to saying, okay, well, maybe I'm just going to take a bit off the candle. Why? Because I've seen a bit of supply. But then there's really nothing in here to suggest that you should do anything but continue to hold with that white candle, now pop back up, making this a nice little point of demand. And it's beneath that point of demand that you can then start to think about setting stop losses. You can just actually set a hard stop loss in the market if you wish. I prefer to make them what I call soft stop losses, which means they're actually not on my platform, because I prefer to wait to see the price action at that level. If a close beneath that, certainly, then we would be looking to minus 1/3. So just giving you a path out of this one, and that's the hardest part, isn't it? Knowing what to do. There's all this uncertainty. There's uncertainty in the market, but there's uncertainty. Well, what do I do to the market? And having, I think, a plan. And there's the old saying, isn't it? If you fail to plan, you're planning to fail. So hopefully I'm also giving you this idea of, well, this is how I'm going to plan out my trade. I know that if it closes beneath there, I've got minus 1/3. I know if I get a reinforcing, another black candle up here to reinforce that one, that would be concerning. And what might that look like? I'll show you here. It might not be higher than the last one, but I'm looking at the intent here from James Hardie. It may well be. So let me just fill that in first and then I'll discuss it. But maybe it's something like that, just beneath the other one. So building point of supply, potentially, that might be a minus 1/3. At least you know what to look for and you know what to do when you see it, certainly beneath there. And maybe there's one up here. So we've just got a path out of this one. Otherwise, my view on this is you've got at least, maybe you've got a full risk position here, but at least plus 2/3 on this in terms of the sort of risky carrying on this, but probably a full risk position. Remember that FRP, full risk position. So looks pretty good. And let me just take that off because it doesn't exist yet. But just to look at some of the earnings, and I'm probably heading off a few of your requests here as well, is Boral, which went really well for us. Hopefully you got on board. I think I featured that probably. It's up there in the top 5 featured companies for the last few months, I'd say. And then looking at the complete irrelevance of $5 here, certainly. Well, there you go. I was going to say we have been to $5 before on Boral, I think, but maybe we haven't. There you go. That's the first time. So we're all-time highs on Boral. How about that? That's just magic. And the usual mentality is, this is an all-time high. I need to sell. Well, it's not my mentality. I can't see really anything if you've got Boral, any reason to sell. Look at this. It was a gap, white candle, white candle, white candle. And I wonder how many of you thought, that's gone up too much now. No. And $5 was not an issue here. So if you knocked out $5 on this day, I think you're okay. But otherwise, no, I think you're running on this one a full risk position. Happy with that one. Nick Scali is another one. And I'm just we'll get to the ones that haven't gone the right way, by the way, in a second. But just illustrating that, the earnings tend to break in the direction of the trend, not always, but that is my philosophy. And I've had many questions over the last couple of weeks. Hey, Carl, do you hold through the earnings? And that is the $1 million question. And as I said, my gut is that you can do because they tend to break in the right direction. But if you are nervous, then at most minus 1/3 prior to the earnings, and then you can always buy it back afterwards. But that's gone really well. And again, you can see here, very, very strong. There's a clear point of supply up here to contend with, but other than that, the candles, apart from this little upper shadow, don't seem to be too concerned by that. So I'm a holder there. If you wanted to get out 1/3 at most on that point of supply, that is not. It's not a crazy thing to do. I think it's a sensible thing to do, but I think you're still very much plus 2/3 here, and probably contrary to what some of you may think. It's probably contrary to what many in the financial media might say. Oh, well, it's gone up. You've got the move to take some profit. But I still think the candles warrant. I'm not just saying this for no reason. The candles are telling you. You tell me if you think the candles are telling you anything different in remaining on that one. And there, look, a few others that have gone the right way. I won't harp on about those because I think we've done pretty well overall. And this one hasn't gone the right way. I think I did make an error here by not telling you straight away minus 1/3. I think that was a big error, but it was based upon the fact that I was looking more at that candle, and I really should have considered the gap, and then it was terrible from there. Look, if you've still got it. Our goal is to get as much as we can for the remainder of what we have left. Is this the bottom where it goes back up to $36? Because, to be fair, that's a bit of a range, isn't it? 27, 36, I don't know. I don't know the future. I wish I could give you a more definitive answer. But what I would expect, and this is what I drew last time, this is all I was looking for last time, is a better place to get out. This is probably what we can expect this time, is that short-term trend is going to come down. It's going to impede price action at some stage. So as long as the candles are white, here's your answer. As long as the candles are white, as long as the shadows are pointing down, I think you can continue to hold, but just be extremely cautious if you see those black candles appearing in and around that light pink zone, because it should offer some dynamic resistance. And it might not just be the black candle that you see, it could also be the candle that has the upper shadow as well, and that would be equally concerning. Okay, so I can go hold on the basis that we are seeing a little bit of a bounce. It's a feeble bounce. You say, oh, Carl, it's bouncing. It actually looks really good now. And I'll say, okay, I get it. The white candles are white. They're quite full. That's encouraging, but look how far down it's come. That is a feeble bounce at best thus far. I wouldn't call this a V-shaped recovery. So exercising extreme caution still on Resmed, and continuing to just wait and watch for a better exit if possible. but also setting out, I think, a plan of getting out of this, because certainly if it closes beneath here now, you've just got absolute problems, and I can't see any reason to still be in. Close beneath here equals my view would be all out. So I've headed off a few of those things. I just wanted to do a sort of an earnings season whip around the grounds. Let's head to, I don't have anything coming from the streamers, so either I've done something wrong, or they've given up after last week. They're just not here. So if you are watching on the stream, can you just type a message and let me know that you are with us, and potentially also give me a stock that you want me to look at in the vacuum of cyberspace. I'm going to head over to our Zoomers and do LYC for Craig, which we said starting to look good last week. Now, today is the 15th, so that means, by definition, we looked at it on the 7th. I wonder if it was that day. That's the 8th. So we looked at it on this day here. And we have to have some context for when I said, oh, okay, it's starting to look good. So we're looking at this candle here, which was the higher point of demand. So if we're looking at our points of demand, they are rising. There's our pod there. And there's our pod there, so rising points of demand. Still extremely iffy, I said, because the long-term trend is down. I said could probably go up into that long-term trend zone, but I then would be concerned that it would struggle to get above that long-term trend zone, because the long-term trend zone has been quite prophetic in the past at determining where the price would reverse from. And I don't think the market's done much different from what I predicted, to be honest. Last week I said 10%. I could get to a 10% buy on the basis of that candle, but I would be 90% hold. This week I think the grip on hold is growing more tenuous, simply because it does appear to be impacted by those by that long-term downtrend zone. And look, ignore that long-term downtrend zone at your own peril, really. So I'll reiterate what I said last week. This is not something I personally would buy. It falls into the category of, oh look, I think it can go up a bit, but I wouldn't buy it. And I think you've got major problems here. And I think we're starting to see some of that supply manifest itself in the market. Let me say this week, I think buy is once again off the table. So I'm going to go back to 0% buy, which then I think we're sort of going into something like this now. And maybe this is starting to warm up again. And that shouldn't surprise anybody, because we're very much still in the long-term downtrend. So make of that what you will there, Craig. Let's go to Perry, who's asking about car sales. Well, there you go. This is another one I tipped as well. We've got a great report there, I'm guessing. I don't know. I didn't look at it. I don't care. I don't care. Oh, ladies and gentlemen, I've upset so many people, so many lithium bugs last week when I said that I don't care what Sayona is doing. And let me say it again, I couldn't care. You cannot underestimate how little I care about Sayona. But it's not Sayona in isolation. I don't care about what any of these companies are doing. I could not give a stuff. Please understand. I'm not sure if I can make it any clearer. Look me in the eyes. I don't give a you know what. It's irrelevant to me. I do care about trend. I do care about price action. I do care about candles. I do care about volume, about volatility, and I care about the sensible application of my capital and the sensible protection of it as well. Apart from those things, I couldn't care less. If you care about those things, good for you. And you know what? More power to you. That's wonderful. Keep caring about those things. But car sales, yeah. Why did I run it as a buy in my shortlist? For no reason. Chart was going up. It still looks good today, Perry. I know Perry doesn't care about what these things do. I know that for a fact. And as long as the candles stay white, Perry, you know the drill. We're going to hang on to it. Could you add some today? I would have added some yesterday. I know I wasn't here yesterday, but and I didn't do the shortlist. But you know me well enough, and this hopefully you know this, right? When I say something, you know me well enough to know that it's not BS, because you know my system. My system doesn't change from one Tuesday to the next. You know that if I did a shortlist yesterday, that would have been proper. In fact, yeah, you know that was my feature chart yesterday. This was in my feature charts yesterday. It's plus 1/3. And look, up it goes today, and I don't know where it's going to close today. I don't know where anything's going to close. But if it closes there, it's a bit of a ways away from the old light green zone, isn't it, Perry? But I can't see why you shouldn't. It would still be a plus 1/3 for me. It looks amazing. And, you know, we talked about Lynas. What did I say for Lynas? I said 0% buy. 75% hold, 25% sell. And for me, this is shaping up more sort of that 25% buy. And the only reason why it's only 25% is because of that distance from the light green zone. I prefer to get things close to that zone. And then it's 75% hold. Let me go back up here. Just type that in and then type that in. I want you to start thinking in terms of these probabilities. I tend to do this every week. So why aren't you thinking about the market in terms of these probabilities? And you really have to, for every stock in your portfolio, say, honestly, rate it. And if you're not sort of up and around here with your rating, why is that thing still in your portfolio? If it's like this, why is it in your portfolio? Why? Or maybe because you like pain. I don't like pain. I am all about the pursuit of happiness, like the movie. WC8. And some people love my method and some people hate it, and that's cool too. It's so easy to never hear about my method again. Don't follow me on Twitter. Don't follow me on any other social media platforms, and don't watch these videos. Okay, Wilcat Resources, another one. Lo and behold, I tipped, and probably, I guess, maybe Perry around here on that candle. Looks great. Or on that candle. Looks great too. Or on that candle, I probably tipped it. I didn't tip it yesterday because I wasn't here, but I can guarantee that would have been top of the pops on my shortlist. So look, it's going well. A little bit of a shadow here, Perry. 30's nothing to be concerned about in my book. But hey, if there's supply there, there's supply there, right? Don't ask questions. Today's candle is not enough for me to get too concerned about it. It's very much high on the hold percentage here. Is it a buy? No, it's not a buy because of that candle, but hey, it's still a live candle. So closes on the high. Why wouldn't you buy some more? Closes here, happy holder. It would have to close all the way down here to be a sell, if you get what I mean, because that would be then evaporating into thin air the demand that we know is in the system. And I'd be watching a level down here. I'm a happy holder until I see sort of something under here. And only then I might go plus minus 1/3. I say, Carl, that's a bit weird because I've been told I need to put my stop loss beneath troughs and things like that. So why? Somebody told you that. So think about it. Think about these things. I say get your stops beneath points of demand, but is this the only way to define a point of demand? By saying, well, there's a trough there? And I totally agree because that's my definition. But there's also a point of demand here. That candle itself, the live of that candle is a point of demand. You cannot tell me otherwise. The bottom of that candle is a point of demand. It's a point where there was substantial excess demand in the market. Plenty of volume that day as well. Tells me about lots of supply removal, lots of traders getting out into fund manager buying, getting in. Happy holder there. Don't think I need to do anything but hang on to that one for now, Perry, but you know what to do if that changes. Vysarn, plus 1/3 here. Maybe we covered it in session. I'm pretty sure I've also, plus 1/3 here as well. I'm pretty sure I've also tweeted about this one from memory, but yesterday's candle was immaculate. That would have been another entry. So in the interest of pointing out those 10,000 great candles, where I think we're up to, probably pointed out about 300 of them. So I've got 9,700 to go. Happy holder there, Perry. Could I buy it today? Doesn't seem to have traded today, Perry, but yes, I could because everything else is still fine. So a happy holder there, no complaints, and would even consider buying it. I won't go to the spreadsheet for that one, Perry, because I'm sure it's got no broker coverage, but neither does Wilcat. I could look at car sales, but do we care? Let's go here. Let's look at car sales only because I do want to bring this in at some stage, and some people do care about these things. Car sales has 14 brokers covering. Of course, we're in the Refinitiv Icon spreadsheet now. This comes from Thomson Reuters, global financial data gathering juggernaut, and they go and survey all the brokers they can find. In this case, they found 14. They say, hey, look, give us your revenue estimate for FY 24, 25, 26, 27, and so on. And thousands of data points are collected here and collated. Their average price target there is 27.25, which actually implies some upside. I'm not sure whether that's the right price. Okay, that's probably yesterday's price though. Okay, because it updates at the end of the day. Make sure that's correct. And using just the default settings, it's looking okay. I'm still waiting for this because the Thomson Reuters server is a bit slow. It's gathering all those price points for me. But let us say, well, that's hopefully going to come in soon. We have 3 of those 14 brokers at strong buy. There it is. We've got 8 at buy, 5 at holds, and no sells, no strong sells, which is great. I prefer not to see sells and strong sells because all of the smarty pantsers there are over there at Goldman Sachs, JP Morgan, Bank of America, Citigroup, UBS, and let's face it, way smarter than we could ever hope to be. No, they all looked at car sales and none of them said, hey, look, bang the desk, I think we should sell it. I want to see bottom left, top right in the EPS line, 51, 53, 59, 68, 78 is bottom left, top right. And that is through a pandemic, supply chain shortages, and inflation and interest rates going up, chaos. And that's because it's car sales, right? People are going to need to sell cars or buy cars. And it's a digital platform, so they can withstand that sort of stuff. And looking forward, the brokers are predicting, not my numbers. Why aren't these my numbers? Number 1, I don't care. Number 2, I don't care. But broker numbers, 12% compound annual growth rate for the forward-looking period. And that is good. That is very good growth. ASX is going to give you sort of 7, 8%. 8 or 9% maybe in a good year, for a market PE of 15. Now, this market PE is higher than obviously to reflect the fact that investors are prepared to pay more for the extra growth they're getting, but we want to make sure that that is not unreasonable. Now, is it unreasonable with respect to 12%? It is on the high side, don't get me wrong. There is definitely a quality premium built into that 26.1, but how does that 26.1 fare to a 5-year historical range? And it's well below the bottom end of that range. So I think if we hold to this account, which is the median PE here, I think that's a really fair and sensible value to hold it to account, a hurdle rate. So I've got no reason to doubt my default setting, which is where I like to be typically, as you know, and that says that my model says that car sales is worth $28.05 to the exact cent. Yeah, right. But what I'm saying here is that I can't see any red flags not to hold car sales, obviously, and then to buy it, but certainly not to doubt my technical analysis. That's really all my fundamentals become, my company valuations. For me, it's all about, is there an obvious red flag there? The brokers hate it. Are there lots of sells? Does it not have any growth? Is there a red flag for me not to follow my technical analysis? And I don't think there is. Okay, let's head back to the charts and we'll keep going. Streamers have arrived. Hello, streamers. You're going to get all priority today, streamers, because I neglected you last week. NMT. Neometals, a company which I loved on the way up. As you know, some of you probably started following me on the basis of my Neometals calls, which were amazingly good. But then it was just, I think I actually did get up on Ausbiz and say, look, somewhere around here, trend's broken, no, not interested anymore. And the rest is history. You can see how the traffic light system works with my model. I don't hide anything about my model. Maybe that surprises a few people. I'm as open and upfront, and it's free to be here. How good's that? 144, 233, that's the long-term trend zone, short-term trend zone, to 21, 34 EMAs. If you don't know what an EMA is, Google it. And whilst they're green, everything's good. When they start to turn to amber, something's not so good. When they turn pink, things are bad. Bad. And that's all. Do I need to say anything else about Neometals? Things are bad. Price action is starting to look better, though. And look, we've got higher peaks and higher troughs, don't we? But it's a feeble attempt at thus. And the candles are good, though. I like the candles. Volume's ho-hum. I wouldn't exactly say, like, it's all the selling's done and then there's all this accumulation going on. It just doesn't feel that way. If anything, it feels like the best case scenario is to get back up to my dark pink zone and then come down again. I could hold it on the basis that those candles are pretty good, the price action's pretty good, but it's just so far away from being a buy for me. It's light years away. When would it become a buy? Well, it needs to go through that classic turnaround setup. What's a classic turnaround setup? I could go back to car sales. I could go to DHG, I think is a really classic one. So you can see here. So maybe we're here. Well, there you go. We're about here on Neometals, aren't we? Okay, so the stuff that needs to happen to Neometals, and this is for you, Davis. Welcome, Davis. And Davis, I don't know if you saw the bits. You might have come in late where I said I don't care. Okay, and so Davis, you might be of the opinion that Neometals is a great company. It's got all this great stuff happening, but I don't care. And what I do care about is if it starts to do these things, it's telling me that the rest of the market is liking it. Okay, and that's really the whole basis of my model, is I can only get in when other people love this company, not like it, but love it. And through here, I know what has domain got to do with Neometals? It's got a lot to do with it. So we need to see the price action continue on those high peaks and high troughs with the white candles that Neometals is starting to do. It needs to bump into that long-term trend zone and start to turn it amber. It might not succeed on the first attempt in turning that trend around. Why? Because people have been so conditioned to thinking that Neometals is a pile of junk. They've been supplying the hell out of it. They haven't been buying it. It takes time to turn that mentality around. And for the demand that's coming into the system, how do I know demand's coming into the system? Well, I've got high peaks and high troughs. I've got white candles. The short-term trend's turned around. Demand is coming into the system, but it needs to get rid of that supply that is still so, their mind is still so set on selling. And we'll start to see that long-term trend will start to converge. It'll start to get closer together, or narrower is another way to put it. We'll see the price action move above that trend zone. It'll stay above there. It'll make higher troughs above there. This one took a while. Eventually, it held it, and with these red arrows, we've got some really nice candles coming in. So that's what I need to see. I think that's the best way to explain to you what I need to see on Neometals and how much more needs to occur before I could possibly call this a buy. But I can go hold for you in the meantime on the basis that some of those things are beginning to occur. From Anthony, KAI, Kairos Minerals, it's looking half decent, which means it's looking half lousy as well. The thing that concerns me the most, I would say, is just yesterday's candle, today's lack of follow through. It looks like it's trying to make a lower point of supply here, so POS and POS there. Look, it hasn't confirmed it. But if it does and it starts to sort of trade back towards 2.5, then this one's probably in a bit of trouble. Look, in the meantime, I think it's okay. I've said that. I said it a couple of times. It should, do the percentage thing on it. Sorry, I forgot Anthony. Do the percentage thing. What do you think? What do you think the percentages are on buy, hold, sell? And look, I can go hold, but if the price action were to change to this, I'd be out. If we were to close beneath the short-term trend zone, I'd be out. And certainly if we were to close beneath here, I'd be out as well. So let me just, if I'm not around, lower peaks and lower troughs, for me, that will constitute a minus 1/3. A close beneath the short-term zone is a minus 1/3, and then the last third, giving it all the chances it can possibly have to hang in there, would be a close beneath the long-term trend zone. So if anything, I've given you a path out of this as a worst-case scenario. Now, maybe I start at the worst-case scenario too many times, but that's probably not a bad place to be. Best-case scenario, should I delete these? I won't delete these. Let me draw in a different color. We'll go to green for best-case scenario. It somehow picks up. It starts to continues to make sort of high peaks, high troughs. White candles stay in there. It's all good. But then, even then, this is, I think, a very important point of supply, and we could struggle beneath that. So I can go to hold at best on that one. I'm not a buyer here, and I think I've explained why. Let's go to Davis. Davis, the second one. Davis, you're lucky today. Not many streamers, and I'm trying to make up to them this week. I think this one looks better than your last one. I think it's trying to turn around. Let's just look at the volume to check if there's any interest. I think there was some interest here. I think the interest has all but evaporated, but you would know that because you're seeing it less and less in the chat rooms and things like that. Looking up, I see a big point of supply here, which is going to give me problems. I see a point of supply there, which is going to give me problems. The trend is somewhat fading in the short term. The long-term trend is not decisively set to the upside just yet. But again, it's a warm one. It's probably like the last one, KAI, coincidentally, where I could get to a hold. But just in terms of path outs of this, and again, I know if you know about this one, you know their projects, where they're digging, what they're digging, the management team, and with all due respect to all of those things and how important they are to you, I don't care. But let me just say, if it closed beneath there, it would tell me that the market is not appreciating those things anymore. And certainly beneath there, I would be looking to do things like that. Now, you do whatever you have to do. I know invariably many people who hold these little mining companies don't listen to me, and many of them tend to regret it. Let me head over here. Let's do the chats. Actually, I'll head over. I'll do a couple of these Twitters and then get rid of this thing. Peter for Resmed, which I have done for you, Peter. Peter also wants DYL, which is actually a really interesting one chart to look at. I did run it. I'm pretty sure I ran it. I don't think I ran it on that day. I couldn't have. I'm pretty sure I ran it on that day because I look at this little pattern here as confirming this little pattern here as holding that long-term trend zone, and then that allows me to do it. So the first arrow is I'm literally not allowed to do it. The second arrow I can. This all looks very good from here. I'm pretty sure I ran it on this day as well, and maybe even on that day. All good. So look, if I've got risk on this one, I'm happy to hold it. There's nothing so sinister in here to tell me that I can't. I am a little bit concerned, however, for obvious reasons about this. This is important, and we're there now. So lo and behold, surprise, 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 supply is manifesting itself in the market. And for this KAI and CAY, we talked about points of supply and their importance, but I probably didn't explain to you why that's the case. Here is a point of supply. It's a significant point of supply. Why does the market absolutely crapped out afterwards? So this level up here represents a point where everybody who held all the way down here thinks, oh God, we should go back to 88 cents. And some of them will sell when it gets there. Not all of them, but some of them will. And I know only a few of them are, because that's what the candles are telling me. But it is something we need to be wary of, but not something I think which is so negatively impacting the company's share price right now that it would require us to lighten our risk. So I'm going to go a full risk position on this one. That is my opinion on, if you had it, I think you are holding a full risk position on DPLO, which is an endorsement. To translate full risk position is an endorsement, SWM. This one here, 7 West Media. Okay, interesting. I'm not sure why Peter's asking me about this one, but Peter also serially asked me about elders as well. And I did say last week, don't ask me about elders anymore, Peter. So he didn't ask me about it this week. And, you know, there you go. There you go, right? Elders. SWM. No, Peter. No, don't ask me about this one either. No, it's not ready yet. And I don't need to explain why. Peter knows why. Don't worry, Peter's not offended by that. For Flayman wouldn't be live market analysis if I didn't get Flayman asking me about a couple of lithium companies. So let us do that now. I don't know if I'll do the big review because it just angers too many people when I say I don't like their company. But it's not that I don't like your company. I don't care about it. It's just I wouldn't buy it. It doesn't make me a bad person. Let us do Delta first. Look, big gap up today. They had some news, wasn't it? Maybe somebody taking a stake, perhaps. I did see somebody I follow on Twitter, BLS, buy low, sell high, tweeted something about it. I get all my lithium information from that handle. Big pop there. Look, gap, good. I mean, you can see from our model, minus 1/3, minus 1/3, minus 1/3 would have been out. And how many times have I said this to you that, out, boom, and tomorrow it could get taken over, and I don't know. And up it goes. And that would be life, and I can assure you move on with my life without a care in the world, because if I need to get back in, I'll get back in. I'm not going to wallow in self-pity that maybe I got out at 78 cents and now it's 90 cents. That is so irrelevant to me. And hopefully that mode of thinking, I've taken that out of your toolbox. But yesterday's candle was very good. I'm not sure if I would have bought it though. I just think these two they're too bearish. And in fact, that's too bearish. It only looked like a bounce to me to back up into here. So I don't think I would have been buy, even though it was at the light green zone. But hey, turned out to be the day that you should have bought it. I think you can hold it, Flayman. I think we're kind of at that level. I'm guessing you didn't get out. That's my guess. And you're still in it. So I think you can hold it. I think down here is a really sensible place now. And not only obviously is it that major point of demand, but you are also starting to flirt beneath that with that long-term trend zone, which we've often said is your last bug out. So at most, you're holding that 1/3. Even if you've gotten out a couple of points, that's the most you're holding, and you would be less unhappy by it going back up. Would I buy back in? So we've covered the hold thesis. So watching beneath here. So close less than is minus 1/3. If you've got another signal, Flayman, watch out. So something like this. So it forms a point of supply here. So point of supply. And then that's reinforced here, point of supply. You might have some big black candles in here. That could be a minus 1/3 in there. But certainly if it closes beneath any higher point of demand that is formed, for me also that's a minus 1/3. So just give me a path out of this one. I know I haven't talked about the buy case yet, and I'm going to do that now. Because I think many people are wondering, hey, Carl, should I buy this? Maybe it's going to get taken over. I don't know if it's going to get taken over. I just know I can't buy this. Sorry. What would it need to do to turn it back into a buy for me? Instead of doing that negative price action, it would need to do the stuff in green, which would be to hold up here and hold very close to this candle's low, and then hook a little higher with another higher point of demand, not a lower one. Well, higher point of demand, not a lower point of supply, and with the right candles. And then I could contemplate adding some risk back in here. But until then, I can hold it on the basis that this is a great candle, this is a great gap, it's doing well today, but I'm not a buyer. Okay, and I think good news is that sell is off the table until we start to see some of those things that we've talked about. And just Flayman, I think your other one there was PMT, which no change on my analysis from last time, Flayman. So I'm going to reiterate that nothing has changed here. I hope you heeded some of those warnings. Hey, well, I'm 50-50, aren't I? If I said to get out of Delta, that didn't work. If I said to get out of Patriot, that's kind of working now. 0% buy, Flayman, 0% hold, and 100% sell, unfortunately, for that one. And let us okay. Let me do the damn overview. AGY very quickly. Just ditto on that. I can't see any reason to own that. It's 0% buy, and it is still 100% sell for me. Allkem, let's get to the majors here. All I've done, you can see here over recent weeks, is minus 1/3, minus 1/3, minus 1/3. Why? Because I've been showing this to you every week that these charts do concern me. So that one there is lithium hydroxide. That one there is lithium carbonate. And I do feel that these companies do have some issues here. Allkem, I said minus 1/3 all over the place. I can't see any reason to be getting back in at this stage. It's very much black candles. In fact, it is at threat. And you heard me say you could, it's your choice, but you could hold that hope, right? That final third until you get beneath that dark green zone. We're nearly there, aren't we? So that's a problem there. For Allkem, I'd almost be at the point where I'm saying, well, there's just absolutely no reason to own Allkem anymore. The light green I would have drawn last week. I need to see that to get more bullish on it. Until we do, I remain quite neutral at best, but increasingly that's the concern, bearish on Allkem. Oh, but Carl, Allkem, Carl. Okay, maybe, I don't know. All I know is what's happening. AZS, another crowd favourite, certainly one. You can see how many times, we've discussed this one, or I've put it in my tweets. These three candles are good enough. So that, and that in combination. I would even go the second one, but certainly this candle is confirming. And this is where, for the first time, I think, to be fair, I'm going to write on the screen for AZS minus 1/3. And if you see, I would suggest if you saw another confirming candle tomorrow, and this is what it will look like. So this sort of a candle tomorrow, and I think in your imagination, you can kind of see how this could occur. Then that I would go, if I saw that, I would do this, right? And then I'd be plus 1/3 max. And then I'd probably, that final 1/3 might go on a close beneath that thing. Or if you really, really wanted to give it lots of room to move, then you might prefer to do this. And I'm not telling you what to do. You need to decide that for yourself. But I can say definitively, let's say if this candle, I don't know where this candle's going to close, but if it closes looking at least that bad, minus 1/3. In fact, you know what, minus 1/3 anyway, because of these three. So don't worry about the candle closes. I'm still minus 1/3, just to catch up to those three candles. And then I would go again here. This is just me. And then I've told you how to do the final. Very popular company. Hopefully, if you've got it, that gives you some insight into your plan for getting out. Core Lithium. I take no pleasure in saying I don't hate Core. I don't hate Core Lithium, everyone. But I can confidently say it is a pile of junk. You've done Delta. GL1 does come up from time to time. No, that one's still in a coma. Little white candle there, but no interest from me. IGO, nickel company, there you go. Minus 1/3 all over the place. And I think we said that's it. IGO, maybe a week or two ago, we said, look, it's just a can't see the point anymore. It just got too hard. And I'm not regretting that. LKE, don't cover this one very often. Well, actually, look at that. That's interesting. So for the faithful here, that's a good candle. That's a really good candle. This added some decent volume. Today's follow through and some decent volume is impressive. It needs to close near the highs. Let me get the latest update for you. So this is an important candle now. If this can close near the high, the demand that's coming today is substantial. How do I know substantial? Look at the volume. Volume is huge, and the volume is removing the supply. Why is there supply in the market? Because it's a pile of junk. But we are removing the people who believe it's a pile of junk. We're getting them out of the system, and we're getting new buyers in around 20 cents. And this is the whole idea behind why volume is important, especially in pounding out these lows, because it's telling you removing that supply. People have been stuck in it for so long. They just want to get the hell out on any bounce. And you're putting fresh demand in, but they're in at 20 cents. They're not getting in at, what the hell did this thing get to? $2.60. That's tragic. But they're getting it at 20 cents. So they're thinking, they're not going to sell at 25. They're going to sell at 40 or 50 or 60 or 80 or $1, right? They're looking for 1, 2, 5 bags. So they're going to withhold that. They're putting demand in, but then once you've demanded, you're part of supply. And if you're only getting in now, that supply will be withheld for a period of time, maybe into this dark red zone here, dark pink zone. I'm not a buyer. Don't even contemplate for a second Carl's going to go buy on this, but I just think you can hold it now. I don't think it's a sell like so many of the other ones. So if that's any consolation there, Lake Resources holders. Leo, I don't think has come back. LRS, I know it's very popular. There you go. Close beneath here, minus 1/3, and I think that's the case here. So, and you can see lots of plus 1/3 there, but switching gears now, and that's just the natural progression of how stocks work. Is that you go up, you come down. There's 3 really nasty candles here confirmed by that one. Little lower point of supply in here. This is the minus 1/3. That candle there is minus 1/3. And I think today I'm going to go minus 1/3, which means at most plus 1/3 remaining. I think is where I'm at here. That's order of magnitude of what I'd be prepared to hold on this one. And if it goes back up, can always get back in. But I just don't like that little pattern there. Okay, so it's closed beneath. It's just clockwork. It's just stuff you do. Just like eating breakfast, ladies and gentlemen. You just do it. You got candles. You've got a methodology. Just do it, right? I'm crossing over with my, what's that there? The just do it from Nike, and then just like eating breakfast from Andrew Bosman. You don't know Andrew. I know Andrew. I'm all over the show. I was doing this lithium sector review. How are we going? 11:46 my Perth time. Let us finish it out. Liontown Resources, just no interest. I think I've said that before. Mineral Resources, no interest. We were very neutral on this. I think you can start to get bearish on this. 0% buy, 25%. I'm going to change this. I think we have officially crossed over now. There you go. Let's go 100 here, and let's go 0 here. And I totally accept that tomorrow this may be the most incredible stock, but this is the textbook. If you want to know what a textbook reversal looks like from a long-term uptrend to a long-term downtrend, this is it. It's got it in the making. And if this does cross over, hey, don't think I'm trying to be going for shock value here, right? Because I don't know what's going to happen next. But what I do know, what I can say with absolute confidence is that picture looks like that picture. Does it? Does it not? What do you reckon? I don't know. These two companies have got nothing to do with each other, right? And there's absolutely no reason why Mineral Resources should do this in the future. There's no reason. I'm not predicting it, but I'm saying that the pattern looks the same. That's all I'm saying. And that's all that's all good technical analysis is. Okay, bad technical analysis is drawing lots of trend lines and saying, oh, trend line break. Bad technical analysis. Good technical analysis saying, look, I've seen that pattern before. I need to take the necessary steps in terms of managing my risk. That's what good technical analysis is about. And it's not about predicting the future. It's about managing your risk appropriately. PLL, I said it last time, that's not good. That looks pretty damn awful. Everybody's favorite PLS. I was asked during the week, hey, Carl, why didn't you run it in your shortlist here, and here? I said, because I don't like this giant point of supply. I'm not going to say I got that right. I just don't think you need to buy it right now. I think I can hold, don't get me wrong, I think you can hold some there, maybe two-third risk position on that one, but no more, in my opinion. PMT I've done. SYA, oh God, it's not saying anything about SYA. Ladies and gentlemen, draw your own conclusions by the shape of that chart and what other people think about it. VUL, it's just, there you go. You're on, I rest my case. WM1, oh, okay, this one, yeah, there you go. It turned around quick, but it gave you just great candles to manage your risk on. 1, 2, 3, minus 1/3 there, minus 1/3. I don't think you really said plus 2/3 remaining. I think today you're flat and neutral on this. So let me just do that. Flat to neutral on that one. There is your lithium sector review, everybody. Okay, let us keep moving now. We've still got time here to get to everybody's requests. I've done all the streamers. I'm going to focus on you now, Zoomers. And let us go here now. Khan has got some conversation. Hey, Khan's online. He's having some conversations there with people about their accounts. And if you have any questions about Think Markets products or services, about opening an account, certainly Khan's the person to talk to. Khan, can you just whack in the chat window there for me the link to open up a demo account and even a live account? So for people listening in Zoom, they can action that. Certainly get onto that. Nick NIC is one coming through here. And this one is coming from Marco. Marco, I'm not going to, oh, that's not it there. I'm not going to have anything good to say about that. That looks bloody awful. But let's try NIC instead of MIC. NIC. Oh, well, there you go. That's not much better, is it? This is the last time. Copy, paste, Marco, unfortunately. In fact, I'm going to just amend that. Go this, and then I'm going to go this. And that is my opinion, okay? Tomorrow, this might be taken over by BHP at $2.50, Marco. I don't know. I can only go on what I see. And that looks really bad to me. If you don't know why it looks bad, short-term trend is down. Long-term trend is down. The price action is lower peaks and lower troughs, indicating that supply is building and demand is running away. I wouldn't say the candles are predominantly black, however, and that is the only thing going for it, is that the candles are actually half decent, but very little interest here and very little interest from me. That I would say the balance of probability, and that's how I come up with these. It's in my experience, the balance of probability as to where it's going next. I believe that the most likely outcome is that this will continue to fall, but I accept that tomorrow it can get taken over at double the price. Let us do MP1. Now, this one I do like, Marco, and I would prefer you focus more on these types of charts than the last types of charts. Why? Because it's doing the exact opposite. Short-term uptrend, long-term trend is turning, about to go up. We have the long-term trend has gone from, look at this, long-term trend, long-term trend, long-term trend, long-term trend, pushing price down. When it's dark pink, it tends to push the price down. When it goes orange, at least it's got a chance of pushing the price back up. Certainly when it's green, it does push the price back up, like there. Okay. Happy holder here. I like the price action. I love this big white candle. I love the fact it really hasn't encroached into that big white candle. You can use it like a half of the midpoint of the candle as a measure. Don't want to get beneath that, and it hasn't. And then heading back up today. And I would suggest today, Marco, if this closes on its high today, this last candle closes on the high, that one there, then for me, this is, for me, I keep pressing the wrong things here, but plus, not minus, plus 1/3 for me of a position that I'm already holding on the basis of this big candle. And I think I must have covered it on that day because I wrote a plus 1/3 on it. Look at that. How many people do you know would on Twitter, on Facebook, on Reddit, on Hot Copper, how many people do you know would tell you after such a huge move to buy something like that? Most people say, oh, take your profits, get out. They just don't understand how the market works. And I feel sorry for them. But anyway, we're all there at one stage. Okay, Lumos Diagnostics, not terrible. I probably said that last time. Maybe on this candle. Didn't look terrible. Not sure if I was a buyer. It's warming up. It's getting better. I'd love to see some more volume, some more interest, some more supply removal. We talked about that occurring with Lake Resources, didn't we? So maybe go back and review that late resources discussion, what we need to see down here. But I do like this candle here. This is impressive. I like how it's sort of building, growing white candles. This is a little disturbing, but only a very shallow pullback into that candle. This is the key candle for me now. As long as we stay above the midpoint of that candle, much like we did on the last example of Megaport, I think this is starting to look very good. And it is so aggressive. It is the most crazy, super aggressive buy here. No, not now, sorry. What I'm about to say, it could be the most crazy aggressive buy if it prints a candle that looks like this, preferably taking out that recent point of supply as in closing above it, and it doesn't have to close above it by a long way. In fact, as long as it's full white, it doesn't have to close above it. Just get near it, okay? And then I could happily plus 1/3 on that basis, but not today. But I would be happy to keep an eye on it, okay? And watch to see if it does that. I would love to see a big volume print on that day as well for Anthony. Bruce is asking about MIN. Bruce, I've done that one. Sorry if it upset you there, mate. WC8 we've also done for Matt. WAM for Roy. Hello, Roy. Welcome. Starting to turn around, starting to look half decent. I'm pretty sure this is one of those fund managers, all right? But one of those really... I'll get sued if I say what I was about to say. But let's say, I mean, look, the stock market's not doing that, right? The Aussie market's pretty much going up close to record highs if you add back in dividends. And WAM Capital, I'm pretty sure they're stock pickers, right? So I don't know what stocks they're picking. WAM, I reckon I'm available for the right number, WAM, because I reckon I could do way better than you. In fact, I know it. No, I'm not a buy here. Let's see how it goes here. For you, Roy. Go back to that discussion of TPG, and it's close. It's close to doing the right things. Not TPG, although TPG we're starting to try and turn around. By the way, Temple and Webster, TPW. There you go. It's not the one. Domain is the one I'm trying to get to, but TPW has done exactly what it needed to do to turn around. Interesting day today. Let's do TPW while we're here. Let's leave WAM. So Roy, WAM's chart needs to change like this. Okay, I won't go back, but just understand that's what needs to happen. Domain group, I'll just quickly flash that up because that's also what needs to happen. I don't like that candle of domain group today. But we're jumping around. TPW, this is what we need to talk about. Earnings today, I'm guessing. Today's candle looks okay for now. Needs to close near the highs. It's a bit like Resmed's. I reckon just because the gap down, if we blend the two candles, we're going to get an upper shadow that's not that awful, but it did take out this point of supply. These are tricky. The reason why I'm pausing is this is hard. This is not easy to come up with a definitive answer on that. But I'm going to go plus 1/3 only because I got stung by not doing it on Resmed. But don't forget, that still means plus 2/3 remaining. Okay, and we're going to manage the exit if the candles turn sour after this one. But this is a huge demand candle here, so I won't go more than that. I'll take advantage of the fact that it's closing near the highs, only a little bit of damage. We got in way lower than this so many times. So taking a bit of profit off the table and paying for some of the trade also, and then just see how we go. The gap down disturbs me. The taking out of that, what didn't take it out, but the fact there wasn't demand there waiting to keep it above that little trough concerns me. So I'm going to go minus 1/3, but that also implies therefore plus 2/3. I'm jumping around, I know. Let's go AW1, which I'm pretty sure I did. No, actually I haven't done that yet. Okay, good. I'm glad. I like to follow these things up. I don't like these three candles, and today's not giving me great heart that it deserves to have a full risk position at this stage. If today's candle closes with that upper shadow or worse, then it's a minus 1/3 for me, and it's just about taking a little bit of risk off the table, seeing how we go. It would, by definition, still mean that we're plus 2/3 here. Okay, that ended up not being where I want it to be. There we go. What could cause us to get out another third and just hold a third on this and see how it goes and take some nice profits off the table? I would say close beneath there would be a reason for minus 1/3. Just quickly, a stock that's had a great run, 3 nasty black candles, confirming candle today, potentially. Just getting that risk down to plus 1/3 as quickly as possible. And hey, if it kicks back up with white candles, we'll just add the risk back in. No trouble at all. PLY, Playside Studios, which started to look good, started to turn around, do those things that we've talked about so many times today. In fact, I would say as recent as here looked really good. I actually think that looks really good. I didn't shortlist it on that day. I definitely was active on that day. Maybe just felt just that little bit too early. But I think it looks really prospective there. And then that highlights the disappointment in seeing something like this and something like this and potentially closing beneath here today. So if you had built up, say, a plus 1/3 risk position here, I think if it closes beneath here, the sensible thing to do, the most risk-averse thing to do, and that's often what I'm looking at, really, isn't it? The most risk-averse thing to do is that, because there's other stuff we can buy right now with this capital, we can put it to better work. AD8 still looks fine. There's a few upper shadows there. I just spotted that. This one's for Jung. But I think we're okay here, Jung. No complaints. I'm happy to give it the benefit of the doubt. Why are we seeing Jung? Why are we seeing Ordinate be such a pile of junk up at this level? Why is it struggling? Well, there you go. There's your answer right there. There's your POS. And that POS is having an influence here. The supply, which we expect to be in the system from that major point of supply, is manifesting itself in the market in these upper shadows and those black candles. We could well see a little bit of a pullback, but it's not one I'm going to panic too much about, probably to this light green zone. And then if we saw the white candles come in, that's important, because the great thing about testing this point of supply is each time we hit it, we're taking some of that supply off the table, so that if we can make new white candles and a high trough, the next time we get through, all the better we're going to be to take out that final bit of pesky supply and, in fact, have sufficient demand to move through that into the next level. And if we can, I was going to say the upside is substantial. The upside's not that substantial. It's only to sort of here where the next point of supply is, but there you go. It's not that far away. We're seeing Ordinate struggle a bit on the basis of those points of supply. But I think there's a great base pattern overall. And once we deal with the supply, I do expect if we can get through them, then good things can happen for Ordinate. So happy holder in the meantime. You know the sort of price action I don't want to see for me to start to manage my risk. Okay, let's stop putting in any new ones, please, and I will finish what's on the list. Just checking who's last. Okay, Nick's last on that one. And Brent's last on that one. I'm going to pick up the pace here because we're down to our last 15 minutes. So I won't do any more fundamentals. Not that I did many to start off with, to be honest. But we're going to go quick fire. I can see YouTube's room with lots of requests, says Barry. Okay, Barry, I can't see them here. So I do want to get to them, and I'm not sure why it's not working. Streamers, if you're listening, I know I didn't get to you last week, but this is out of my control. The platform is not giving me your requests. All I can say is, and I'll type it into you to show that I'm here. Please try again, and I'll get to your requests as best I can. There you go. Can't post messages to some channels. Well, trying. Barry, I'm not sure if I can get Barry to channel those just yet, but because we're so far behind on time. But apologies again. That one is out of my control. Okay, let's keep going here. DYL, I've done for you, Vin. For Matt, hey Carl, CBR if you can as well. Legend. Not sure about the last bit. Carbon Revolution, mag wheels, aren't they? Not mag wheels, but carbon wheels. Going okay. I'm not a buyer yet. We've talked about all the things that they need to do, Matt, before I could get to a buy. I would love to see some volume come in. Because if you look at this one's really, really struggling. And it's maybe just a warning in the future. Try not to get yourself stuck in these things that really don't trade. But I can see a path to holding it on the basis that the trend is turning back up. There are some candles, but it's just so not the stuff that I want to own myself personally, okay? And I'm only saying path to holding it because I'm guessing you're holding it. You probably want me to say something nice about it, but that's as nice as I can get on that one because everything else looks bloody terrible. And again, not looking at the company because I don't care, just looking at the chart. But this chart looks great. I've tweeted this one many, many times. I think it still looks good. I can't see any reason to get out if you're on it. For you, John. Okay, still looks good. And we've talked about your other one there, which is DYL. Happy holder. Would I buy it here? Not on those last 2 candles, just indicating it the tiniest little bit of supply, a little bit of a waste from the green zone. I want to get it close to the green zone with the white candle. That's the one there. That's the perfect candle buy there. But happy holder in the meantime. I'm guessing they do something to do with medicinal marijuana. Not that I care. HGO. Hillgrove looking warm. Maybe even I did put this one in on this day here, which I did think on that day did look good. But the point of supply up here, I think, is just overwhelming, isn't it? I hope to see it get through that, and I hope to see it pop up to 9.5. But it is starting to lose the battle a little bit, isn't it, Terry? It is looking a little iffy. Terry's actually said it's looking iffy. I agree with you. And determine, Terry, just how attached you are to this one. But for me, I think it's kind of a 1/3 or 2/3 risk position holding at the moment, but I don't think it's a full risk position. Let's face it, Terry, between you and me, this doesn't warrant a full risk position yet. Hey, closing above here, that's when we can move to a full risk position. But I think it's at best a 1/3 or 2/3 at total best, and whichever it is, minus 1/3 on a close lesson there, not just a tickle, but a close lesson there. Okay. I'm not trying to give you the definitive, hey, this is what's going to happen. That's not what I'm about. I can't do it. All I can say is, look, this is how I feel about how much risk I would hold on this, and this is where I would get out, or this is where I would get more in. I think this is starting to look pretty good for you here, Vin, again. No complaints. I could happily hold 1/3 or 2/3 of a full risk position on this, and I'd be adding on the next white candle or a move above this point of supply. Until then, as I said, happy holder. It would have to do quite a bit to get me out, actually, and I think that's a good sign. Certainly beneath there is a minus 1/3. That's big problems, but probably closing beneath the light green zone also would be a minus 1/3. But I can go a hold in the meantime. As I said, big white candle could get me adding 1/3. But not until then. Let's go to CAT, which has had its problems, hasn't it? It's sort of up and down. I could go a hold, but at least we've got, see, that candle there is not, for me, that's not enough to sell. This is getting close to it, but then we had this white candle, hang on. And it's just one of those crappy sets of candles that doesn't do enough to get you out, but just does enough to keep you in. But the good news is we do have a really definitive level here, and we're probably being resisted by that short-term zone as well. You probably get from the tone of my voice, it's more of a scaling out of this one than a scaling in just at this stage. And I hope it goes the other way. I hope it goes up. But certainly for me, beneath there, that's where we're taking some action. And then sort of beneath there also would be another minus 1/3. If you haven't already sort of if you didn't chicken out a little bit up there. Now, it's not terrible at all. This is by no stretch of the imagination a bad looking chart. It's still long-term trend changing up. It's still short-term trend is still technically up. I know it's under some pressure, and we've got some nice white candles here trying to come into that short-term trend zone, and it's done it before. So there's every possibility we see this, and then if it starts to make those high peaks and high troughs with the right candles, I'm going to start to feel more confident about it. But until then, I think it's given us enough reason to, as Terry put it, call it a bit iffy at this stage. Let's do Dun DYL. The DYL, very popular today, probably the most popular company, and many of those uranium stocks are looking very interesting. BOE starting to look very interesting. I reluctantly put these in my shortlist last week. I mean reluctant. I ignored them going up for a long time because it's bloody uranium. Okay, and you can guarantee, and if you're listening to this and you're holding these stocks, you're not offended by this, but we all know we're going to be disappointed by these companies again. We know that is in our future, but they looked good enough for me to put them in. There's your uranium sector review, everybody. They're looking good, but we all know we're about to be extremely disappointed by them. And if anybody disagrees with me, please let me know your opinion there. But I can guarantee nobody's going to disagree with me on that, unless you're buying these things for the first time and you just don't know yet. What is the charting platform you're using for Brent? It's called Amy Broker Brent. It's a standalone charting package. It's not attached to any broker, despite what the name suggests. You pay a one-off lifetime license, but it is really for people who, number one, can spend the money on the data, because the data's quite expensive to feed this, or very clever at getting free data sources, but that's not me. And good at programming using the language, and then you can put on all your custom stuff. And that's why I have it, because this existed way before TradingView. I know you can do it with TradingView, but I'm an old stick in the mud. This is what I know. This is what I like, and that's why I haven't switched to that platform. So I'm going to stay here on Amy Broker. Norgate Data is the data provider I use. They would argue with me that they're not expensive at all because they are the best quality data out there, and they're absolutely correct. They are the best quality data out there, but whether that's good value or not, I'll leave that up to you to decide. James Hardie, JJ, we did do earlier on, and it still looks great. Khan has put up those links, everybody, in the chat to the demo there, demo account. Please go and open those accounts. XTE for you. This one is for Brent again. I can't see anything I like there, Brent, unfortunately. Downtrend on the short term and the long term. The candles are not exciting. The price action looks pretty awful, and the volume has completely evaporated into thin air. So that's a pass from me. This one is a warm hold. It's not a buy. I did run New Hope, its cousin, as a plus 1/3. I'm happy to hang on to that plus 1/3 at this stage. I think the candles look pretty good, actually. This is definitely my pick of the two. Uptrends are better developed and showing more impetus to break through what are clearly very pesky points of supply. There's substantial doubt in the market here. I did run them because on a technical basis they are meeting my criteria, but I will look you in the eye and say this is not a company I would own personally at this point in time. And I like to see the backup from coal prices, also heading up to give me some heart in this, and they're not. And doing it enough just yet. Not saying they're not going up, but they're not doing it enough. In fact, I haven't uploaded today's data, but actually I think I did clearly therefore upload today's data because that's in there. And let me just fix this. Because it didn't go to 0, by the way. Actually, there you go. That's starting to look half decent there. But it's not, that's why the coal stocks look half decent, don't they? So let us keep moving. We did, therefore, Whitehaven, I think, looks better than it has done. I don't think I want to buy it over, say, New Hope, which I'm happy to hold. CRN, we had a bit of a negative move down. It seems to have come back with some white candles. So holding while the candles are still white and the price action is still up. SMR has come across my desk recently. I think you can hold it. It's actually getting pretty close to a buy, to be honest. It'd be super speculative, super aggressive here. But hey, look, closing sort of towards or above 293, that's actually going to start to look half decent for a turnaround play, adding plus 1/3 initially, and no more than that, because I want to see them really prove themselves, these coal stocks, before I get to start to get really involved. So we had the lithium review, we had the uranium review, we had the coal review. I think we're on a bit of a roll. XAM, which is Xanadu Mines, XAM. There we go. Still looks fine. Look, this day here is a minus 1/3 for me. Okay, don't pass go, do not collect $200 for me. I see a candle like that in a stock that's done really well, and I just precautionary measure go minus 1/3. The other great thing, it has created a wonderful little point of demand here under which we can start to plan. There's that word again, plan out how we're going to deal with this trade. And that gives me that there. And then I might only be holding the final 1/3. I might be giving that plenty of room because it's a stock that could do anything until it closed beneath the long-term trend zone. That would be a long, long way away. But that's how I would deal with that one. For you there, Peter, from Rupam, can I have a look at Drone Shield, DRO? That is okay. It's one I've been warm on in the past. I'm not sure if I've shortlisted. I don't think I have. Correct me if I'm wrong. Look, just watching the minus 1/3 beneath there, I don't want to see it get beneath the short-term uptrend, and certainly not beneath the I'm just not convinced about this one. Sorry, it's just what would start to get me convinced. I want to see a nice big white candle that closes up there somewhere, and then I could add a third, but until then, I think I'm going to remain quite cautious on this one. Okay, doesn't look awful. Don't get me wrong. This is good. This is good. I just don't like the price action, and I don't like. So I probably should explain why. It's really my subconscious is actually saying there's something wrong with this, and just those points of supply. And I just think the way the market has responded from them, I just see lots of supply in the market. Too many black candles, ultimately, isn't it? That's what it's all about. KGN, which I think last time we said -1. I'm in the wrong window. That's why. God, stop doing that. There we go. -1/3 here. And here, maybe you did it, maybe you didn't. Minus 1/3 here on the close beneath that. So candle there, and I can't see any reason not to fulfill that and meet my obligations based upon what I've seen. If you're still in for whatever reason, then this is the kind of that final leg of support there. Minus less than that is a minus 1/3. If you are such a true believer, you could maybe hold on for a close beneath that, but I just think that's superfluous. So yes, this is a moving out of this trade, not into this trade. And what would make this look good enough to hold and only hold is, well, maybe I could buy it, but I'm just worried. These are massive signals here of substantial supply in the market for this company. And that's what gets me quite concerned. And it would take something like this to convince me that hold is back on the table. Until then, I think you are moving out of this one. That's just my opinion for Europalm. I'm going to skip your last one simply because I've got too many other ones to get through. And in the interest of trying to do that in, well, in fact, I'm going to have to miss out on those. Sorry. We didn't quite get there, but we did plenty. To be fair, it is 1:15 and I need to get going to another meeting. So don't worry, I'll be back on Tuesday next week. Get your questions in advance if you like. Hit me up on the social media. I don't mind. Okay. 1 o'clock Tuesdays, Helen, 1 o'clock Tuesdays for ASX. Thursdays is the macro, 1 o'clock, and then Fridays. That's the 1:30 version there. Register at www.thinkmarkets.com/au/webinars. If you're not a client of Think Markets, well, you should be, because we are the good guys in the Australian broking scene. Hey, I don't do this for Think Markets for free. And when you think about what they're giving you in these sessions, even just paying a couple of grand US a month for that Thomson Refinitiv icon, paying for all of my costs and putting me in front of you every week, I think that's pretty special. And I think that deserves some of your goodwill as well. $8 flat rate trades, Hen and Chess sponsored. And if you're looking to trade CFDs, you can trade pretty much everything we've talked about today on those CFDs, commission free, very, very important. And you can do those fractional shares, which gets you in those plus 1/3 if you need to. And commission free, you're going to save a whole heap of money. You can trade FX, indices, commodities, futures as well. Head to thinkmarkets.com/au for more details. Why would you come to us? We are an award-winning broker. We've got offices all over the world. We're regulated all over the world. Easy to use multi-asset platform, world-class trading apps. And I think the mark of a good broker is that Hen and Chess sponsorship, because there are plenty of brokers out there that go the cheap way, try to offer a lower rate, just to get people in, and then just give them awful service. And if you're trading with any of those people, you know that already, that the service is bloody awful. You can't call them. You can't even email them with getting a reply within the next 24, 48, and sometimes up to a week before you get a reply. You can call us. Our number's on the website. These are all the reasons why you should be with us. Head to www.thinkmarkets.com/au, or Khan has put the link in his chat window there. If you're watching me on YouTube, hit the subscribe button. I do go live a few times a week, and that'll keep you notified of those updates. But very important, you hit the thumbs up button to let me know you like what I'm doing, so I'll continue to do more of it, and does convince Think Markets that we should do more of these as well. All the best for your trading until we catch up again. Bye-bye for now. Before you run away, though, don't forget that everything we've discussed today is general in nature, has not taken into account your personal financial circumstances or particular needs. So before acting upon any of that general information, you should consider it carefully or seek the help of a financial professional. If you want any more information about Think Markets, head to our website, download our PDS, our Product Disclosure Guide, or our Financial Services Guide, or give us a call. Bye-bye.